Hey everyone, welcome to the Building a Financial Fortress podcast, helping you increase your financial knowledge. This is episode 13, recorded on April 16th, 2022. This podcast is for entertainment only. It is not investing advice. Do your own research. Okay, so we have a pretty good episode this week. I'm going to go through the weekly market update, going to talk about some weekly Bitcoin news. Want to briefly touch on the March 2022 CPI report that came out this week and with some highlights. And then it's time for the monthly portfolio review. So we'll review weightings and talk about a couple of highlights of some things that some new things that I added this month. So, moving right into the weekly market update, this is again courtesy of Seeking Alpha. Stocks meandered lower in late trading on Thursday, deepening losses for all three of the market's benchmark indexes in the holiday shortened trading week. The moves came as investors focused on inflation, with Treasury yields climbing higher, and back-to-back inflation reports showed prices posting record advances. On Thursday, the benchmark 10-year U.S. Treasury yield ramped up to multi-year highs, climbing 14 basis points to 2.83%. Major banks, including Goldman Sachs, Morgan Stanley, and Wells Fargo, reported a mixed bag of first quarter earnings, sending most bank stocks lower. Earnings season will hit its stride next week as seven Dow blue chip names issue reports. For the week just ended, the higher yields hit tech stocks, sending the Nasdaq Composite 2.6% lower, while the S&P 500 fell 2.1% and the Dow Jones finished down 0.8%. Moving on to Bitcoin news. So the first article here is from Cointelegraph, April 15th. MicroStrategy shareholders letter will vigorously pursue more BTC buys. MicroStrategy CEO Michael Saylor has proclaimed to the shareholders of his company that his firm intends to vigorously pursue its reserve asset strategy to buy and hold more Bitcoin. Saylor's publicly traded company is the largest single wallet holder of Bitcoin in the world, with 129,218 Bitcoin, according to wallet tracker Bitcoin Treasuries. Those coins are currently valued at about $5.1 billion. MicroStrategy bought 4,197 more coins on April 5th. By comparison, Tesla, MicroStrategy's runner-up in the hodling race, owns 43,200 Bitcoin valued at about $1.7 billion. In MicroStrategy's 2022 proxy statement, which was filed with the SEC on April 14th, Saylor praised his company's ongoing success in being early to add BTC to its treasury and add value for customers and shareholders. MicroStrategy only paid about $3.9 billion for the BTC in its treasury, translating to a paper profit margin of $1.2 billion. Saylor wrote in the letter, "Our parallel strategy to acquire and hold Bitcoin has been a tremendous success." The letter also states that MicroStrategy's BTC holdings are well in the green, but made it difficult for the company's executives to obtain liability insurance. As a result, Saylor has provided the insurance out of his own pocket. Saylor's 68.1% ownership of MicroStrategy means that he can pretty much do what he likes at the company, which also helps explain why more companies have not followed his lead. He's been one of the most vocal proponents for Bitcoin since 2020 and uses his position to reach global audiences. On March 29th, the MicroStrategy subsidiary of Saylor's software firm said it would use $205 million obtained in a Bitcoin collateralized loan from Silvergate Bank to buy more Bitcoin. Saylor said in an announcement that the loan marked the first time his company was using its BTC holdings as productive collateral. Despite global headwinds from the war, inflation, and interest rate rises, MicroStrategy and Do Kwon's Terra Luna buying tens of millions of dollars worth of Bitcoin at a time has helped maintain some confidence in prices. Terra's holdings are now only 800 coins behind Elon Musk's Tesla, which holds the second most BTC among publicly traded companies. Bitcoin down 2.65% over the past 24 hours, trading at 40,109, according to Cointelegraph. So, I've talked about MicroStrategy in the past, and full disclosure, I do have and have had investments in MicroStrategy in the past. But Michael Saylor is a really smart guy, and MicroStrategy is definitely a pioneer in the industry in terms of holding that amount of Bitcoin. Interestingly enough, though, MicroStrategy tends to trade like any tech stock and has sold off quite a bit in this recent sell-off in technology shares. Um, I'm not sure what the current market cap is, but I think at one point the Bitcoin on the balance sheet was worth more than the whole company was, which is kind of interesting. Okay, next is again from Cointelegraph. This is April 15th. Making Bitcoin legal tender in Mexico will be an uphill battle, says Ricardo Salinas. During the Bitcoin 2022 conference in Miami, Florida, Cointelegraph caught up with Ricardo Salinas, the founder and chairman at Grupo Salinas, in an exclusive sit-down interview. As an early Bitcoin adopter since its $200 days, Salinas has experienced firsthand the highs and lows of the market and learned a thing or two along the way. Salinas started off the day as a panelist at the main stage of the Miami Beach Convention Center among fellow billionaires Orlando Bravo, Marcelo Clore, and Dan Tapiero. In a discussion titled Bitcoin Billionaire Capital Allocators, Salinas disclosed that 60% of his portfolio is in Bitcoin, while the other 40% is a mix of oil and gas investments. That same day, April 7th, fellow conference attendee Mexican Senator Indira Kempis announced that she proposed legislation to make Bitcoin legal tender in Mexico. You may remember I talked about that last week in my update on our highlights from the Bitcoin conference. Mexico would follow El Salvador, Roatan, Honduras, and Madeira, Portugal, if it does go through with the legislation. When asked what he thought about this, Salinas said it's going to be an uphill battle to make this happen because this country, unfortunately, has a mindset that is too attached to its control over fiat, or what he calls fiat fraud. The powers at the central bank and Ministry of Finance hate Bitcoin because of the freedom it represents, and it's a direct threat to their monopoly money. As the founder of the Mexican bank Banco Azteca, Salinas admits he's part of a problematic system and reveals that he'd love for his bank to have access to Bitcoin payments, deposits, and lending. In the meantime, however, as the owner of the Electra Group supermarket chain, he is currently working on enabling the retailers to accept Bitcoin payments for all items. While sitting with Cointelegraph, he said that Bitcoiners remain a small percentage of the total population and that there is still a long way to go before there's universal adoption. He also reminded viewers that no matter an investor's age, the most important quality any investor can have is curiosity and the mental openness to continually learn. And I couldn't agree with that more personally myself. So, well said. Okay, the next one is from Bitcoin.com. This was posted 2 days ago. Big Short investor Michael Burry says the Fed has no intention of fighting inflation. Famous investor and founder of investment firm Scion Asset Management, Michael Burry, shared his thoughts Thursday on the U.S. economy, inflation, and interest rate hikes. He is best known for being the first investor to foresee and profit from the U.S. subprime mortgage crisis that occurred between 2007 and 2010. He is profiled in The Big Short, a book by Michael Lewis about the mortgage crisis, which was made into a movie starring Christian Bale. Burry tweeted Thursday, "The Fed has no intention of fighting inflation. Serial half-point hikes are for getting elevation before stocks and the consumer tap out." Same with rapid-fire QT, quantitative tightening. The Fed's all about reloading the monetary bazooka so it can ride to the rescue and finance the fiscal put, Burry added. At the time of writing, his tweet had been liked 13 0.8 thousand times and retweeted over 2,200 times. Many people on Twitter agreed with Burry. One user wrote, "It is correct that the Fed would like room to ease again." Another noted, "Not just the Fed, look at all the central bankers around the world raising rates at similar times and similar basis points. Canada and China around the 24th of this month by 50 basis points. This is coordinated, and they think it will work without any major collapse." A third user opined, "Anyone who doesn't blame the Fed for out-of-control housing inflation is gaslighting you." The rate of U.S. inflation jumped to a 40-year high of 8.5% in March. We'll go over that in a little bit later in detail, and showed little sign of quickly reversing, according to data released this week. However, many people believe that inflation is much worse than the reported number, and I'll talk about that too. Goldbug Peter Schiff commented Thursday, according to the government, March consumer prices rose by 8.5% year over year. Consumer prices are composed of the prices we pay for the stuff we import and the stuff we produce ourselves. But March year over year import prices rose 12.5% and export prices rose 18.8%. That's an average rise of 15.65%. The president of the Federal Reserve Bank of St. Louis, James Bullard, has repeatedly warned that the Fed needs to raise rates much faster to fight inflation. He told the Financial Times this week that it is fantasy to think that the Fed can bring inflation down sufficiently without raising rates to a level that constrains the economy. Meanwhile, Federal Reserve Governor Christopher Waller believes that inflation peaked in March. He said Thursday, "I'm forecasting that this is pretty much the peak. It is going to start to come back down." So very interesting, and again, very much in line with my thinking, and my portfolio is pretty much constructed along these lines of persistent inflation. And even though the Fed is tightening now, and it's markets are taking a beating, it won't be long before they have to stop that because the government needs to borrow money, and it can't borrow money at really high interest rates. So. But we'll see. We'll see what ends up happening. Okay, and then the last article is again from Bitcoin.com, just posted here today. Rich Dad, Poor Dad's Robert Kiyosaki warns hyperinflation, depression are here. The author of Rich Dad, Poor Dad, Robert Kiyosaki, gave a series of warnings regarding the U.S. economy Friday. Rich Dad, Poor Dad is one of my favorite books, by the way. Is probably the first personal finance book that I read, and I enjoyed it quite a bit, and actually had all my kids read it too. It's a good beginner book. But anyway, it's a 1997 book co-authored by Kiyosaki and Sharon Lechter. It has been on the New York Times bestseller list for over 6 years. More than 32 million copies of the book have been sold in over 51 languages across more than 109 countries. Kiyosaki treated that a Wile E. Coyote moment and the biggest bubble burst are coming, claiming that hyperinflation and depression are here. The famous author recommends buying gold, silver, and Bitcoin before the coyote wakes up. The author of Rich Dad, Poor Dad opined that baby boomers' retirements will be stolen and that the $10 trillion in fake money spending is ending. He called the U.S. government, Wall Street, and the Federal Reserve thieves. Moreover, Kiyosaki tweeted early this month, "Repo market inversion. Last time this happened was 2008. In 2008, I borrowed $300 million to buy great real estate at bargain prices. Time to get rich coming again. Time to get smart, not greedy," emphasizing that weak businesses and greedy investors will fail. The famous author wrote, "Be careful, recession and crash coming." A growing number of economists and forecasters are now saying that a recession is on the horizon for the U.S. economy as the Federal Reserve continues to fight the highest inflation in more than 40 years. JP Morgan Chase CEO Jamie Dimon, for example, said this week that the risk of the Federal Reserve tipping the U.S. economy into recession is rising. Former Treasury Secretary Larry Summers also said a recession is the most likely outcome for the U.S. economy, not a soft landing. In October last year, Jack Dorsey, the CEO of Block and former CEO of Twitter, predicted that hyperinflation will soon happen in the US and the world. Recently, Mexico's third richest billionaire, Ricardo Salinas Pliego, also warned about severe dollar inflation. He recommended buying Bitcoin. In addition, Kiyosaki also warned about the massive crash many times, predicting a giant stock market crash in October. He noted that after the crash, the US will slide into a new depression. He further warned that we are in the biggest bubble in world history. Last month, the Rich Dad Poor Dad author said the US dollar is about to implode, recommending investors buy more gold, silver, Bitcoin, Ethereum, and Solana. He emphasized that the world is in trouble and the US national debt is going through the roof. In the same month, Kiyosaki warned that the government will seize all cryptocurrencies. Nonetheless, he predicted the end of the US dollar, noting that the Russia-Ukraine war is giving rise to crypto as a safer haven than the government's fake fiat money. And again, this is why we self-custody. Okay, so that's the Bitcoin news update for the week. Now let's talk about the Consumer Price Index report. Now this report came out on April 12th, and it was for the month of March. And the average, increase for all the items in the index annualized was 8.5%, which is pretty high. I think it was a little bit higher than what a lot of people were expecting. What's interesting when you get into the report, of course, the excluding food and energy is much lower. It's probably around what is it, 6.5%. But here are some eye-popping numbers. So these are all the items in the index making up the 8.5%. Of course, there's different weightings, but these are all the items that are double-digit increases. Again on an annualized basis through March. Food at home, 10%. Energy, 32%. Energy commodities, 48.3%. Gasoline, 48%. Fuel oil, 70.1%. Energy services, 13.5%. Electricity, 11.1%. Utility piped gas service, 21.6%. Commodities less food and energy. Commodities, 11.7%. New vehicles, 12.5%. Used cars and trucks, 35.3%. Everything else was in the single digits, but those are just some absolutely staggering numbers. And so you look at all that and you're like, well, wait a minute, how can it be 8.5%? Well, that's how the math works. Interestingly, though, there's a site called Shadow Stats, and if you go out there and you look at their alternate inflation charts, um, so uh, uh, basically what they do is they adjust the CPI calculations back to when the calculations originally started. So they have a couple different series. One is 1990 and the other one is 1980. So basically, and I'll just read this here quickly, the CPI chart on the homepage reflects our estimate of inflation for today as if it were calculated the same way as it was in 1990. The CPI in the alternate data series tab here reflects the CPI as if it were calculated using the methodologies in place in 1980. In general terms, methodological shifts in government reporting have depressed reported inflation, moving the concept of the CPI away from being a measure of the cost of living needed to maintain a constant standard of living. And so when you look at the 1980 base chart, it's well on its way to 18%. It's well above 15. It's halfway between 15 and 20, basically. So, And I can include a link in the show notes to Shadow Stats. I like looking at some of their information. They've got data on money supply, unemployment, CPI calculator, the dollar, GDP. But the Shadow Stats on CPI inflation is more realistic and more in line with what I think people are really seeing on the street. Okay, so moving on then, let's go through the monthly portfolio review. So no big changes this month, really. A couple new things that I wanted to highlight that I added, but we'll just kind of go through the weightings, starting with cash. We're at 5.9% this month. We were down a little bit. Last month we were at 6.6%. Um, Large cap is virtually unchanged from last month at 2.5%. U.S. mid cap stocks is at 2.3%, which is virtually unchanged from last month. And U.S. small caps at 2.2% is pretty much unchanged from last month. Also, international stocks at 7.8% are again pretty much unchanged from last month. Commodities, which I just have a small position in uranium ETF, URNM, is unchanged at 0.4%. No bonds this month, so I nuked all the bonds and put everything back into real estate and international, but it wasn't that much money. Real estate's up about 1.5% this month to 30.7%, and that consists of a rental property as well as actively managed REIT portfolio in my retirement account. So that's a pretty core holding there to the portfolio. Private equity virtually unchanged at 16.4%. Bitcoin down a little bit. Bitcoin has kind of sold off a little bit since last month, so it's at 21.4% versus 22% last month. And then other gold, silver, other assets is at 10.5% versus it was about 10.2% last month, so it's up slightly. So the big moves this month was really I had a Roth IRA at Chase, and I had it invested in MicroStrategy, and then I really wanted direct Bitcoin exposure, so I rolled it over into a new Roth IRA with Unchained Capital, and what I liked about it was, they you hold your own keys basically. So they set up a multi-signature vault. You have two keys, they have a key. You can't access the coins without two out of the three keys. So it's they literally, if the government told them to turn the Bitcoin over, they couldn't do it because without your cooperation. Um, so it's a very secure thing. Um, and basically you set up the vault, the funds get rolled over to the custodian, they buy the Bitcoin, and it sits in there, and then you just hold it. Um, so basically, it's kind of an integrated solution. So I'll just read this from their website. But it says, with the Unchained IRA, we take care of everything for you. After registration, we'll set up a multi-signature vault properly titled to your IRA, help your IRA purchase Bitcoin, and deliver that Bitcoin to your IRA vault with no single point of failure. Their fees also I was kind of impressed with because I've looked at other Bitcoin IRAs and they're pretty reasonable. It's $9.95 for a one-time setup fee. The annual fee, which they start charging you in year two, is $250. They charge a 0.5% trade fee when you buy your Bitcoin. And I didn't do this because I actually figured out how to set up my everything myself, but they do offer a concierge service for an extra $250. They'll help you set up the vault. And if you need a hardware wallet, they'll sell you one too. But I already had one, and I bought another one from Amazon and set that up. And so I had the two wallets that I needed, and it really wasn't that hard to set up. So the hardest part was getting the money out of JP Morgan, to be honest. I mean, that was an experience because they required a medallion stamp. And so I went to Chase and I said, "Will you do this for me?" And they're like, "No." And then I went to my other bank, Wells Fargo, and they said, "No, we don't do that anymore." So I'm like, "Great. So how am I going to get this done?" Well, they ended up accepting a notary, so ended up getting it notarized. And fortunately, Bitcoin had dropped from when I first started to when I finally got the money in there. So I guess it all worked out, but it was quite a debacle going through from not with Unchained, but with the legacy bank. It was they just did not want to let go of the money. But anyway, so I set that up, and it's you can look up your balance anytime you want, and it just kind of sits there, and it's feels pretty good. So that was something I did this month, and then the other thing I did was I set up an account called One Gold, and this one's kind of interesting. I'll read this from the website. One Gold gives you direct ownership of vaulted gold, silver, and platinum at an ultra low cost. A free account will provide you with 24/7 access, a best in class user experience, and the peace of mind that comes through dealing with industry leaders. This was set up by AppMex, which is a big physical gold dealer, and Sprott, who's also a big gold investor, and they also sponsored some ETFs and things. Um, so what's cool about One Gold is you can actually have gold that's stored in different locations. So you could buy gold and silver in the U.S., gold and silver in Canada, or in the UK, or in Switzerland, and it's actually physically stored there, which is kind of cool. And then you can also get platinum too in the U.S. Um, and the gold premium is 0.8%. The silver premium is 4%. They're stored with either Loomis or RCM or AppMex. Lloyd's of London provides the insurance. There is a small charge, obviously, for storage and insurance. And then, you have 24/7 liquidity. So, uh, of course, the best way to own your gold and silver is to physically have possession of it. But this is a nice alternative to be able to invest online and have it physically held. And I do think you can get physical delivery. I'm assuming like if you live in the U.S., and you want to get physical delivery of your gold or your silver or your platinum, you can do that. Um, but anyway, so. Just an additional diversification, not a huge position or anything like that, but something that I wanted to. I already have some physical gold and silver that I hold in a bank safe deposit box, but I just wanted to continue to add a little bit more. So anyway, I can put a link in the show notes for that as well. And that pretty much. Wraps it up. So again, not a big change to the portfolio diversification. Still very heavy on the real assets, hard assets, kind of light on the stocks, and no bonds, and still very very strong position in Bitcoin. And I'm not selling any of that. I was even thinking about well, what happens if it goes up and it becomes 50% of my portfolio? Still not selling. So it's going to be, I'm going to be holding on to that for a long, long time. Um, so thank you for listening to the podcast. If you like the show, please like and leave a comment. Don't forget to subscribe on whatever podcast platform. I think I'm on most of them that you like, and so to make sure you don't miss any updates. You can follow my Substack at bitcoinfortress.substack.com. I moved my blog over to Substack, and so all my old articles are out there as well. And I'll be posting new ones on Substack from now on. And you can also follow me on my Twitter. It's Bitcoin Fortress, and my Twitter handle is at Nick Reichert, NickReichert. And I will talk to you next week. Bye bye.